Principles of finance, a la shmup. Offshoring for tax benefits. Hot topic. All right, but what does that mean? Well, in 2016, what was left of Europe post-Brexit submitted to Apple a tax bill for $15 billion. Well, that event shined a light on global tax policy in a way that had never quite hit the limelight. Basically, Europe claimed that Apple owed them for a decade and change of past tax bills. Apple had created a ton of jobs all over Europe and had believed that it was to receive a tax waiver in return for doing so. Well, Europe is economically weak and, fading fast, so it is desperately trying to cut deals with anyone who will employ its desperate socialist masses. But there's another side to the story here as well. When American domiciled corporations do business in other countries, they typically set up a subsidiary corporation there, which exists pretty independently. That corporation has its own set of accounting books and maintains its own definitions of profits, and it is taxed independently as well. So Hewlett-Packard France pays a 35% tax for the privilege of operating in France. It would love to wire home to its Palo Alto, California offices the cash profits it has retained over time from doing business in France. But if it does so, the American government will tax those profits again. So Hewlett-Packard would turn a dollar into about 35 cents really quickly by paying tax twice, once to France and then once to the good old US of A. Well, why would Hewlett-Packard do that? Yeah, it wouldn't. So it leaves money in France, hires French workers, and builds a tech business offshore outside of America. Fair, not fair, smart politics, dumb politics, smart economics? You tell us.